Good afternoon, everyone. Today we are going to do the non-current asset movement schedule. So welcome. So non-current asset movement schedule is our topic today, and we are going to do a question for November 2017. Question number 1C. November 2017. Question number 1C. That will be the question that we are going to do together today. So welcome. So welcome to this class. So welcome. You are very welcomed. And make sure you also subscribe to my channel by clicking the button below. So kindly subscribe and share to other people. So this is what the question reads. So the question reads that the following information relates to non-current assets of Jirani Mwema Ltd as at 1st October 2016. So we have the information about non-current assets with the accumulated depreciation. Additional information number 1. The following non-current assets were acquired during the year ended 30th September 2017. So you have the date of acquisition, non-current asset, and their cost. Information number 2. The following non-current assets were disposed during the year ended 30th September 2017. So we have the date of disposal, the non-current assets that were disposed, the sales proceeds and cost, and the accumulated depreciation. Then number 3, Jirani Mwema depreciated the asset using straight-line method on a pro rata basis. So on a pro rata, meaning you need to check the dates. So you have the non-current assets and then with their rates. Then information number 4. On 1st October 2016, the management of Jirani Mwema decided to start depreciating freehold at rate of 2.5%. That one is on the year 2016, on 1st October 2016. And then that one is from 1st October. So you are required to prepare the non-current asset schedule. So you are required to prepare the non-current asset movement schedule. So we can do it together. This one is for Jirani Mwema. So for Jirani Mwema, so that's our format, as you can see, that you are going to use. That's the format that you are supposed to use. Maybe I can make this one a little bit big. Let me make this big. So start with the balance down, which is always at cost. So start with the balance down, which is always at cost. So let's start with the freehold property. Now freehold property, the balance at cost at the beginning of 2016. Remember, we are doing for 2016 to 2017. How much is it? 35,000. So 35,000. So this one is in 1,000. And then we have the one for plant and machinery, which is 26 to 50. Then we have the office equipment, which is 52. So office equipment 52, 50. Then you have motor vehicle. Motor vehicle is 15,750. 15,750. 15,750. Then you add the total. So the total is 82. You have a total of 82 to 50. 82 to 50. That's the first part. Then you go to the second part. You check if there was any addition or acquisitions. So also on cost. So any addition you insert on cost. So let us see. The foreign assets were acquired during the year ended. So during the year ended 30th September 2017. So we have this machinery at 3,500. The machinery. We do not have freehold, so this one is 3,500. We also have another one on 1st April. That is motor vehicle 100. Then you add the total. That will be equal to 57. When we add not 57, 3, 4, 5, 56. 5,600. So we have 5,600. Once we have additions, then you can consider disposal also at cost. Disposal. We also consider disposal at cost. Now, information number 2, there was a disposal of machinery. So we do not have any for freehold. For machinery, we have a machinery disposal. That 150. Remember at cost. You put it at cost. That 150. Then we have office. By 1st January 2017 to 80. Then we have what? We have motor vehicle. Motor vehicle 1,750. Then you insert the total. You insert the total, which is 3,150 plus 280 plus what? 1,750. That is 5,180. 5,180. I don't think there's any other thing. There was no reclassification, so you can check if there was a reclassification, but we do not have. Then we put balance carried up at cost. So remember disposal you deduct. So this one will remain the same. Let me use a different pen so that you know it is a balance after deducting something. So this one you can say, we can talk about we can talk about balance carried down, which is also at cost, and we can call it A. You can call it A at cost, then you call it A. So this one is 35,000. What about the other one? Can confirm. So it's 26,600. 49,70. 16,100. Then 82,670. 82,670. That is it. That is the balance carried down, and here I have said we put it in form of in black pen. We just insert it in black pen so that we understand. Then we come up to we introduce depreciation. Now we can introduce depreciation. We introduce depreciation. So let's introduce the depreciation, and the first thing that we start with, the accumulated depreciation balances, balance brought down. So we say accumulated. Let me use a different pen. I think I prefer to use a different one. So we say accumulated depreciation balance brought down. So accumulated depreciation balance brought down higher. Now we do not have accumulated depreciation for because it is for the first year. For the first year of use. Now Freehold, when was Freehold was started depreciating their item? Now on 1st October 2016, now before even we go to information number 4, let's go to information number 1. I've been provided with the accumulated depreciation for the beginning of 1st October 2016. So meaning there was an accumulated depreciation for 2015 at the end of 2015. For Freehold, it is 0. Let us just insert that one direct. For Freehold, we do not have accumulated depreciation because the following information relates to the non-current asset of Jirani Mwema as at on 1st October 2016. Now, meaning this information about depreciation, accumulated depreciation, is for 2015. Meaning there is a depreciation. So for this one, there is no accumulated, but we have accumulated for 2015 at the end for plant and machinery, which is 10,115. Then 2,555. Then you have 91,000. Then you find the total. So what will be the total? The total will be, you add the 3, will be 21,770. 21,770. And then we added the depreciation charge for the year. This one we need to compute. Depreciation charge for the year. No, there is no accumulated depreciation for Freehold because Freehold there was no depreciation policy in 2015. So in 2015 there was no depreciation policy. So the depreciation started on 2016. So the depreciation started on 2016. Now let us put the depreciation for 2016. For 2016. Higher. Now, not 2016. We are doing for 2017. We are doing for what? 2017. So this one is at the beginning. And then this one is at the end. So sorry, this one is at the beginning. And this one is at the end. Of what? Of which year? So remember it's on cost. Now we are talking about cost. So that is the beginning. So that 5,000, if you check, it was in October 2016, and at the end of that year 2016, that is on 30th September 2016, it was still at 5,000 because there was no any depreciation. No, there was. Now let us consider depreciation first. So let's compute depreciation here. So depreciation for Freehold. So depreciation. Let's start with the Freehold. Now Freehold, they said on 1st October 2016. And when does the year start? So October, it ends on September. So October, September, So it starts on October. So the year starts on 1st October and ends in 30th September. So kama hapa ni 2016, but itakuwa ni 2017. Now 2.5. So is it reducing balance or straight? So on 1st October, the management of Dedan Mwema decided to depreciate freehold at a rate of 2.5% per annum. So times 35,000, because there was no depreciation during the previous years. How much would that be? So 2.5 times 35,000, that will be equal to 2.5 times what? Where is it? So 2.5. So 2.5 divided by the 100 times 35,000. That is 875. That is 875. Now, this question wants us to prepare. That one is fine. So from 2016 to 30 September 2017, that is only 1 year. So it's only for 2016 to 2017 end. So up to the end. So that's just 1 year. So it will be 875. If it was for 2018, then we could have considered the depreciation for 2018. Yeah. Let's go to the next item. That is plant. Depreciation for plant. Now plant wanasema pale juu, plant 20%. Straight line basis, so 20% of the cost ni ngani, ndio hii hapa 26. Now but there were some additions actually, so we need to consider the date of acquisition. So let's go with the cost 26 to 50. Remember it is on straight line basis. Now we need to remove what was sold, which is that 150. And then then also need to consider the depreciation for the item that was acquired, that is that 500. So that will give us the depreciation for the year. Depreciation for the year. Now that item that was acquired was that 500. Let us prorate it. So that 500, let's go to that 500. It was acquired on 1st October. So if it was acquired on 1st October, then it will be there for the whole year. So from 1st October 2016 to 30 September, that is 12 months. So 12 over 12, because it will be there for the whole year. So we are told to prorate. So 26 to 50. 26 to 50. Minus that 150 times 0.2, that is 4620. Then 0.2 times that 500, that is 700. So plus 4620, 5320. That is correct. And then let us consider office. Now office to 15% times the cost, which is 5250, and then we deduct what was done what? That is office. Mm-hmm. The other one is fine. And then now remember, let's go back to 280. Let's go to 280. Now remember 280 was acquired on 1st January 2017. Now we need to prorate it because they said we are supposed to prorate. So it was acquired in 1st January. Let's see how many days. 1st January. Remember our year started on October 2016. This one January 2017. Then it ends in 13th September 2017. Now 1st January, so October, November, December. So this one is 3 months. So meaning this one is 3 months, and this from this part is 9 months. Now we acquired. Sorry, we had an item of 5250, which we sold it, so we remove it to our account. Now, but it was only used for some period, not the whole time, just specific period. So we need to consider the depreciation of the item of this period that was not considered. Let me see. So it was sold. Now this period, we need to consider this period, this one. Now it was used for only 3 months, then they sold it on 1st October. So it was not there from January to September, but it was used. So there are some depreciation in here that we need to consider. So let's consider that depreciation. That is 15 times 280 times 3 over 12 only those 3 months. So the rest will, because it was used for 3 months, the 280 that was sold. So the 280 that was sold, it was sold in 2017, but in that 2017 it was used for at least 3 months in that year. So just consider that 3 months before we sold it, we remove it to our cost, but we also consider the depreciation for the 3 months. Let us see. So it will be 5250 minus 280 times 0.15. That is 745.5. Then 0.15 times 280 times 3 over 12. That is 10.5. So depreciation for the year. That was 745.5 plus 10.5. That is 756. So 756. Then you go to the motor vehicle. We go to the motor vehicle. Motor vehicle wanasema 25%. So motor vehicle is 25%. Now on cost, what's our cost? 15,750. But there was something that was sold, which is 1750. And then also consider 25%. There's something that was acquired. That is, they acquired 2100. And then also the one that was disposed, 1750. For how long was it used? So you need to consider also for disposal the period that was used. The period that was used for disposal. Now let us see. So our year starts on October 1st October 2016 and ends in 30th September 2017. So let's go to the motor vehicle. Now motor vehicle number 1 for 2100. So the foreign assets were acquired. So it was acquired on 1st April. So it was acquired on 1st April. 1st April. So to work up 1st April. Let's assume it is here. 1st April 2017. Let us see the period. So from October to April, so October, November, December, January, February, March, up to March, that is 4. But it was not, the asset was not available this period. It was only available because it was acquired here. So to remove October 2017, so it was there from here 2017 up to the end of that year. So it was there for only 6 months. So it was there for only 6 months. So you say times 6/12 because it was only available. But for disposal, let's say for disposal, so they dispose 1750 on 30th September 2017. So they dispose it at the end of that year. Mwisho. Kumaanisha it was there throughout the year. So we multiply by 1 or by 12. 12/12. So tuliuza mwisho wa mwaka. So kumaanisha ilikuwa from the beginning of the year up to the end. So 12/12. Let us see. So 15,750 minus 1750 times 0.25. Then is 3,500. 0.25 times 2100 times 6/12. 262.5. Then 0.25 times 1750. 437.5. Hivyo ndo napata. So that 500 plus 262.5 plus 437.5. That is 4200. So this one will be equal to 4200. 4200. Then you find the total. So unasema 875 plus 5320 plus 756 plus 4200. Napata 11,151. 11,151. Then depreciation for disposal. So you also consider depreciation for disposal. Depreciation for disposal. So we just check where we have disposal. So in this case, we do not have disposal. So we have disposal in this case, this one and this one. So let us start with the disposal for plant and machinery. Disposal of plant and machinery. Now you allow me to rub the other side so that allow me to rub the depreciation that you have done so that I can do what? So that I can do the workings for the depreciation of the disposal. So let's start with the depreciation for disposal. Depreciation for disposal. So let us go to, we have been provided either way. We have the 350. This one. So information number 2. This one was good. We have been provided. And there was no need for me to rub. For office is 70. Remember depreciation will be less. and then 175. Now, even there was no need to calculate. There was no need for computation because already tumepatiwa kwa swali. But in some cases, you might not be provided. So, this one is 595. Now we find now the balancing figure. Maybe we shall confirm to see if the representation will give us 350 later. But for now, let us just say, now the balancing figure is accumulated depreciation, balance carried down, and we call it B. So, how do we find it? You take accumulated depreciation at the beginning, you add depreciation charge for the year, then you less disposal. In this case, it will be 875. What about the rest? So what about the rest? We can say 10,115 plus 5320 minus 350. That is 15,085. 255 plus 756 minus 70. 32, 41, 9100 plus 4200 minus 175. That one is 13,125. So 13,125 plus 3241 plus 15,085, 875. That is 32,326. Now you can get the net book value. So you can confirm, then we find the net book value. Maybe I'm going to use a different pen. So we say net book value. Net book value. And that is the balance at the end. So you take A minus B. To be A minus B. So I will say 35,000 minus 875. So we deduct, so A minus B, 34,125, 26,600 minus 15,085, 11,515, then 49,70 minus 32,41, 17,29, 91,00 minus, so not 91, 16,100 minus 13,125, 29, 75, 82,670 minus 32,326. That will be 50,344. That is it. That's how you are supposed to do that question. That one marks the end of that question, which is for November 2017 1C. This one is question for November 2017, question number 1C. November 2017, question number 1. Question number 1C. Question number 1C. That is it. That is it. So let us look for a question for. There was another question that was done. Let me show you. So we can do another question. Then we call it a day. So let me show you another question that was tested concerning this one. So please make sure you subscribe to my channel. So that you can get more subscribe to my channel so that you can get more of this. You can also share with your friends and others so that they can also learn. So we are still learning, so you just share with others so they can also benefit. So let's look for April 2025. April 2025, question number 1C. So April 2025, question number 1C, that is Kilimo Enterprise. We shall just change here to Kilimo Enterprise. We are going to change here with Kilimo Enterprise. Now this one is a bit different, so the format will remain the same, but in this part tutakuwa tunatumia years. So this one, the format will just change a bit. So this one will be a bit different. Yep. Now, the reason why I'm saying it to be a bit different, let us just read the question, then you see what I mean. Now the details here will be in form of years. So according to the question, they are saying Kilimo Enterprise commences its operation on 1st January. So they started their business on 1st January, meaning it was not there in 2020. So the business was not there in 2020. So they started in 1st January. So meaning it will end in that 1st December. Now, but we have different years, so we have 2021 up to 2020, 2021 up to 2024, 2022, 2023, then we have 2024, then total. So we are not going to use the what? We are not going to use the name of the asset in this case. So you'll be very keen, because some questions require you to use the number of assets. Others require you to use the what? Require you to use the name of the asset. Other questions require you to use the years. So regardless, make sure you understand. So let me put also this one, because it's an important balance. Then now we can do the question together. So we need this one. We don't need this one. That way. That is it. So now let's do that question together. Do it together. So let's start with the cost. We start with the balance brought down, but in form of cost. So this is what they are saying, number one. Now we have the balances at the end. So the first information there, Kilimo Enterprises. Just a moment, let me put this one into charging before it goes off. Just give me a moment. Then I need to go off. So, so I'm hoping it will not go off. It is about to go off. Now let's go to the information above. Kilimo Enterprises commenced its operation on 1st January 2021. The firm acquired several assets of plant for its use. The plant movement extract for the year ended. Now this one is for the year ended, meaning let's go to 2021. Now in 2021, we do not have the balance at the beginning, but you have the balance at the end, which is 80,000. And remember, the balance at the end is always the balance at the beginning. So if the balance is 80,000 here, now it means also in 2022. So if the balance at the end of 2021 is 80, then at the beginning will be 80. Let's go to 2022. The balance at the end is 80,000. Remember, we are putting in cost. Now, if also at the end the balance is 80,000, meaning at the beginning will be 80,000. Let's go to 2023. The balance at the end is 90,000. The balance at the end is 90,000, meaning the balance at the beginning. The balance at the beginning will be 90,000. Let's go to 2024. Now, in 2024, we do not have any information. So in 2024, there is no any information, and therefore that's what we shall compute on our own. Now, having said that, now we can go to the next item. Let's go to the next item. That will be what? Additions. So let's go to the additions. Now, the first information is about disposal. Let's go to the disposal first. Disposal took place on the place as follows. Plant W, which was acquired at the commencement of the business at a cost of 15,000, was disposed on that 1st December 2023. So what use 2023 here, but we put on to make a cost on cost, which was 15,000. Let's put this one in 1,000. Already it is in 1,000. So already it is in 1,000. So 15,000. Let's go to information number 2. On that 1st December 2024, Plant X, which was acquired on 1st January for 30,000, was disposed at 21 million. So 30,000. That is 2024. So they disposed in 2024 at a cost of 30,000. I hate to memorize that. Let's go to addition. Information number 2. Acquisition of plant. Plant W was sold and replaced on the same day with Y. Plant Y was to be, the value of plant Y is to be determined. So the plant of Y is to be determined. So we are going to determine it. Plant X was sold and replaced on the same date with the plant Z. So plant X. So when was plant X sold? Plant X was sold in 2024. So kumbuka hapa kuna X. So X was sold in, let's make hapa X equal 2024. And then plant W was disposed on 2020. So be keen. So that one will give us the way. So tunasema plant W that was sold and replaced on the same day with the plant Y. Plant W. So that is 2023. That one is for 2023. So the value is to be determined. So this value, we are supposed to determine this value of addition. But the other one we have been provided. Plant X, which was in 2024, was sold and replaced on the same date with the plant Z at 50,000. So plant Z, we acquired it at 50,000. That is it. Now, so hiyo ni kujaza sasa. There is nothing hard. I could have used black pen here. Yeah, that one is fine. Let's pick our pen. Now from all the information that we have inserted, there was no any disposal or addition in 2021, meaning this balance will also be 80,000 because there was no any additional disposal. So that when you add 80 plus this one minus this one, you shall get 80. So 80,000 plus 0 minus 0 will be 80,000. So there was no any addition. Also in this case, there was no any addition or disposal. So 80,000 plus 0 minus 0 is 80,000. Now in this case, 80,000 plus a figure here minus 15 must give you 90,000. So what will be this figure? So let us assume it is x. So tunasema 80,000 plus x minus 15,000 must give us 90,000. So what will be the value of x? The value of x will be our addition. So do it. So itakuwa ni 90,000 plus 15,000 minus 80,000. That is 25,000. That will be equal to 25,000. The other one is fine. 90 plus 50 minus 30. 90 plus 50 minus 30. That is 110,000. Now, so this one is supposed to be in black. Like that black pen. So that is 110,000. Now you can find the total. So the total, but it is not necessary, but it's, let us just put 80 plus 80 plus 80 plus 90. This one is 330. 25 plus 50. Then is 75,000. Then 15 plus 30. Then is minus 45. Then total, so 330 plus 75 minus 45. That will be equal to 360,000. Can confirm, so 80 plus 80 plus 90 plus 110. Good. Now let's go to accumulated depreciation. Now because this business started in, because the business started in 1st January 2021, there was no any accumulated depreciation at the beginning. So ni dash. Kwa sababu biashara ilianza hiyo mwaka, kumaanisha kama ilianza 1st January 2021, kumaanisha there was no depreciation in 2020 kwa sababu hiyo biashara haikuwa 2020. Therefore there is no depreciation brought forward from 2020. So kumaanisha ni zero. Now let us see for depreciation for that year. So we have depreciation rate is 20% on reducing balance. Let's start with 2021. So depreciation tunaanza na 2021, itakuwa ni 20% times 80,000. 20% of 80,000 itakuwa ni 8 times 2, 16. That is 16,000. 16,000. Unakuja unaweka hapa. Let me use a different pen. This one hata imekataa kuandika. So 16,000. Let's look for depreciation for disposal. There was no any disposal in this case. So kumaanisha when we want to get the accumulated depreciation, accumulated, it's supposed to be accumulated. Yeah, I'm supposed to use a different pen. Just a moment. So you are supposed to use accumulated depreciation. Now we take accumulated depreciation balance brought down. We add depreciation for the year, then we less disposal, which is would be still 16,000. Now this accumulated depreciation balance carried down will be the one at the beginning. So what's end in 2021? So that one is the difference between this one and when we use the value of PPE or the value of items. So for this one, the balance at the end becomes the balance at the beginning. So the balance, accumulated depreciation balance carried down will be the balance at the beginning in the next period, which is 16,000. Then go to depreciation for 2022. For 2022. Now remember, they said it is on reducing balance. So meaning it will be 20% times. We need to take the balance first. Let us just say 80,000 minus 16,000. Write that calculator. So 80,000 minus 16,000. That is 64,000. Then we say 20% times 64,000. So 0.2 times 64,000. That is 12,800. So here it is. 12,800. There was no disposal. So there was no disposal. So there was no disposal. So come on, there was no disposal. You just take, you add depreciation at the beginning, that is 16,000 plus 12,800 minus 0. That is 28,800. Now the balance at the end becomes the balance at the beginning, as usual. That is 28,800. Then we need to consider depreciation for 2022. For 2023, sorry. That will be equal to what? 64,000 minus 12,800. So 64,000 minus 12,800. That will be equal to 51,200. But remember, there was an addition. There was an addition of 25,000. So we say 20% times 51,200, and also 20% times the addition of 25,000. 0.2 times 51,200. That is 10 to 40. And then 0.2 times 25,000. 5,000. So that it will give us 10 to 40. So here is 10. Here it is 10 to 40. Then we also need to calculate depreciation for disposal, because we have at that disposal of 15,000. So this one we are not supposed to deduct. So 2023 still. So depreciation for disposal. Now, this asset was acquired in 2021, but it is sold in 2023. So the 2023 is the final. So we say 20%. So let's start with 2021. 20% of 15,000. That is the first year of use before it was disposed. 3,000. Then you go to 2022. 20% times. Now 15,000 minus 3,000, because it is on reducing balance. So remember, we also need to compute that one. itakuwa ni 12,000. So 0.2 times 12,000, that is 2,400. Then also in 2023, that is the final. This is the final times 12,000 minus 2,400, that is 9,600. So it was disposed in that year. So 0.2 times 9,600, that is 1920. So we add the depreciation to 3,000 plus 2,400 plus 1920, that is 7320. So you put here, so you less, because there was a, so you less 7320. So you less 7320. So let us find the figure. So 28,800 plus 10 to 40 minus 7320. I'm getting 31,720. So I'm getting 31 what? Oh, that's supposed to be 15, sorry. There was a mistake here. So it's supposed to be, so 15 to 40. So it's supposed to be 15. So 36,720. 36,720. 36,720. Then this will be the balance at the beginning. 36,720. Then you go to 2024. So I think you can do it on this side because of the space. So 2024. So we say 20% times what was the remaining? That's it. Because it's a straight line basis. Yeah. So the amount that was remaining was 51,200 minus 51,200 minus the depreciation. Yangapi? You're supposed to raise the depreciation for we have two items there. We have the one for 2,500. Now we are supposed to add, let's just do this. For 2023, there was another item that was acquired. So what we do, we just add these two, the cost. So 51,200 plus 25,000. That is 76,200. 76,200. Then you less the depreciation of 15 to 40. I think that will be fine. 15 to 40. I think, do we have any other thing? Yes, we have another item. That is, there was another acquisition in that year of how much? 50,000. So 76,200 plus minus 15 to 40 times 0.2. That one is 12,192. The 0.2 times 50,000. That is 10,000. So that you get 22,192. So 22. I could have used a different pen. So 22,192. Then goes 36,720. Now we can also compute for. We can also compute for what? we can also compute for what? Disposal. So depreciation for disposal. Present at 2021, which is 20%. So how much was disposed? 30,000, but it was acquired in 2021. Let's not consider 2021. Before tumalize mapema. So 0.2 times 30,000, 36,000. Then 2022, 20% times. So 30 minus this, that is 24,000. So 0.2 times 24,000. That is 4,800. Then for 2023. 2023 in the final. 2024. So 24,000 minus 48. 19,200. 3840. 2024. 20% times. So 19,200 minus 3840. 15,360. So 0.2 times 15,360. That is 3072. Then you add the total. So let us add from 2021. So 6,000 plus 4,800 plus 3840, then plus 3072. 17, 712. Then 17, 712. So 17. So we deduct 17, 712. Now let us find the final figure. So that is 6, 720 plus 22, 192. Then minus 17, 712. So that one is 41,200. 41,200. 41,200. 41,200. So we can get the total, or we can get the net book value. Let's see the total. 16,000 plus 28,800. Then that's 6,720. So let's say 1 to 50. Then you have 16,000, 12,800. 66, 232. Then 7320, 17,712. That is minus 10, 932. Then we say 81 to 50, 66, 232. Then minus 10, 932. That is 136. That is 136, 550. So, so 16,000 plus 28,800, that is 6,720. So 81 to 50. Thereof 16,000, 12,800, 15 to 40, 22,192, 66, 232, then 73, 20, 17, 712. They're supposed to be 25. This one is wrong. 25. 25, 032. This is supposed to be 25. So that will be 81 to 50. 66 to 32. 25, 032. So 175. 172, 512. One 172, 514. I hope it's the same with the other one. Okay, let's see this one. 28,800 plus 15 to 40, and that's 7320. 36,720. Then have that 6,720 plus 22,192, and 17,712. 41,200. Okay, we shall confirm that one. So let's find the net book value, which is 80,000 minus 16,000. That is 64,000. Then 80,000 minus what? 28,800. That is 51,200. We are going to confirm this figure. Then 90,000. So A minus B. 90 minus 36,720. That's 53 to 80. Then we have what? 110,000 minus 41,200. 68,800. Then you have 360,000 minus 172,514. Supposed to give us 184, 187. Let's confirm with this one. 64,000 plus 51,200, 53, 280, 68,800. Supposed to be 237, 28. Let us confirm.